All right, welcome back. Our call of the day today, a double downgrade for McDonald's at Redburn Atlantic. Kate Rogers is back, and we are so happy to have you back, and you have the details for us.
Thank you so much, Scott. Great to see you. So Redburn hitting McDonald's with that double downgrade this morning to sell from buy on concerns over GLP-1s leading to declining foot traffic, coupled with worries, of course, about the economy. It also lowered its price target to $2.60 from $3.19. McDonald's often performs well during economic slowdowns, but clearly Wall Street is challenging that narrative. The issue here is value and consumer perception around costs as restaurant inflation continues to outpace grocery costs. On the GLP-1 front, the note refers to behavioral science. So if one person in a home is on one of those drugs, that reshapes dining habits for an entire family. Worth noting here, this is the third downgrade that McDonald's has seen in the last 2 days. The note says foot traffic declines are expected at lunch and dinner and will impact not only McDonald's, but also other chains, including Domino's and Yum Brands KFC. Scott, back over to you.
All right, Kate, thank you. That's Kate Rogers with a rare double downgrade. Malcolm, you have any interest in this name? Have you ever owned it? If not, why?
Haven't owned McDonald's, don't love anything, especially right now, that's tied to consumer spending, as we keep getting stories about whether the consumer is actually slowing down or not. But I do think the one positive buried inside of McDonald's is their growth plan and their plan to add additional franchisees and open additional stores from here. So if you are looking through at where the profit engine is going to come from, it's going to come from them collecting those upfronts with new franchisees coming into the system.
I mean, for a double downgrade, down 1.25%, not that big of a deal, at least from the market standpoint today. JP Morgan's price target in terms of other calls raised to 320 from 300 at Wells. That's Mike Mayo, the well-known analyst over there. You own this stock?
We do, and I think if we look at, JP Morgan is the most dominant bank in the U.S., and I think we're in an environment where large banks are going to continue to gain market share, just as we move to the digitization, AI, how that impacts the consumer experience at the bank. So there are a lot of investments that these large banks have the ability to make that small regional banks do not, and I think that's going to continue to set them apart. So we continue to own JP Morgan. We've owned it for a long time. It's our only position within banks.
Oh, the only one.
It is the only one in traditional banking. So we're sticking with it.
How about Disney, which you own as well? The price target to 130 today, reiterated by at Loop. They finalized the Hulu purchase from our parent. What do you think about this name from here?
Yeah, so I think the Hulu purchase was really a lot lower cost than was originally speculated it could be. And this will allow them to really leverage Hulu and do more bundling with Disney+. So I do think it's a positive. And overall, this name has really recovered quite nicely. Trends have picked up. I also think this deal they have with the Abu Dhabi location is fantastic. I mean, they're not paying to open it. They're just going to manage it and collect a service fee. And so that, I think, is a great economic proposition for that name, as well as just great for the brand overall to expand more globally.
Let me get your take on Tesla while I'm on this topic, because there were 2 more calls on it today. There were a couple yesterday as well. Reiterated underweight today at Wells, $120 is the price target. Reiterated underweight at JP Morgan today, and there were a couple of downgrades yesterday. And this fallout between Musk and the president, where that goes from here and whatever ramifications there are resulting from it. How do you view that stock today?
Yeah, so obviously it's a bad moment in terms of PR for Elon Musk, but I actually do think the more I've thought about this after this breakup happened, I actually think it's the best thing for both parties because Elon can distance himself from the president. I think that's hurt some perception of Tesla, especially in certain areas of the coast. But when we look at the company overall, I mean, this week on Thursday, we have the robo-taxi event. That should be a catalyst, or at least give us a view of how that project is coming along. Then you have the lower class vehicles, which are coming down the pipeline, robotics. So there's a strong pipeline there of innovation that I think we don't see in a lot of large companies. It's a highly controversial company, highly volatile stock, but we're sticking with our position.